I'm just going to go ahead and introduce Lior with Blanket, co-founder, Lior,
And yes,
co-founder, man of many talents. Oh, my boy Jonathan Cook is on. Jonathan, nice to see you.
Jonathan.
Yeah, he raised his hand already. What's up? All right. All right. So we're going to start this thing in about 1 minute. We got everybody coming in. So appreciate that. Got Matthew Meyer in there. Oh, Sheena on there. So thank you everybody for jumping in. All right. So Leo and I, we've been knowing each other for a couple of years now. They've made a huge impact in the industry, in the property management industry with Blanket. Hear great things about them. Um, Blanket is a client of VPM as well, so we really appreciate their partnership. And one day, Leor will get Blanket training on our platform. I know he's building it for his new version, and so.
You touched the spot there.
I get, I'm always going to get one dig in, right? So, uh, anyway, Blanket is has an incredible product that will help you become an asset manager instead of a property manager, and will help you find and actually retain clients. So, with no further ado, Leor, I'll let you take it from here.
Awesome, man. Thank you so much. And we will get that training. It's in the works. We're almost done with our playbook. So really, I hope in about a month. I know I've been saying that for a couple of months now, but we're getting there. And hopefully that will be ready very soon. So I think before I'll start sharing slides, I will start with the why. Like, why do we even, want to become asset managers, or why do we need to become asset managers? What is this whole thing called asset managers, and how does that fit into our customer lifecycle journey? Like, where me being more of an asset manager focused property manager, where does that fit into my sales process? Where does that fit into my client onboarding process? And where does that fit into the ongoing process of the ongoing management with my clients, right? What we call customer success. So that whole why thing comes down to a few, I would say, high level trends that are currently happening in our industry, but also from the perspective of how being more of an asset manager impacts our bottom line when it comes to number one, growth and growing the business, adding more doors, and number two, how does that also impact the churn and keeping more doors, keeping them in house and not losing clients to whatever reason. So the main thing we need to understand when we're thinking about this whole thing of asset management and how does that fit into property management, well, first of all, need to understand the fact that there's like a huge gap right now in the industry. When you look at all the different asset classes that we have in the real estate sort of like space, right? We have commercial, we have industrial, we have a lot of different asset classes. And the investors in these asset classes normally have an investment manager, have a professional investment manager that, first of all, helps them understand what they should do when it comes to investing their money, meaning where should they invest it, talking with them about their goals and what are their plans, in the long term, like why are they even investing, so they can understand also what is the better service slash product for them, right? They're meeting with them also about, quarterly or annual reports talking about how their investment is doing, and really having this sort of like investor relations mindset. And this is what all the investors in those asset classes get. Now, also happens that a lot of the investors in these asset classes are also accredited investors. So they don't necessarily need a lot of guidance, right? They just need you to talk with them about their goals, what they need, and make sure the investment is operating as right as they expect it to be. But in single family, in the residential space, which is owned by almost 99% of it is owned by individual mom and pop investors, these folks are not sophisticated in majority of them. And they need that guidance, and they don't get that. They don't have an investment manager function in their sort of like client journey. And naturally, the only one who they might be able to get that is their property manager. Because as property managers, we are the only ones who actually have a contractual relationship with our clients versus a very transactional one, right? Like they have normally with their agent, with their lender, like they do a transaction and it's done. But we as property managers stick with them for the long run, hopefully for a very long run. And the interest like alignment of interest is perfectly aligned when we're thinking about it with our clients, because the more properties they get, the more, or the bigger their portfolio gets, the more money we make. The better the properties they have, also the more money we make, right? Because if their property is renovated, well maintained, or even if it's a new construction property, let's say they bought a new one, we would probably get a higher revenue per unit as well for those properties, considering when we're, maybe managing a property that is completely, messed up in a very, very bad, sort of like situation, and the rent is way below market value. The tenants are, changing and turning over every several months or every, year or two. So like that eventually impacts our revenue as well. So the quality of the property is also impacting that sort of like ability for us to make revenue. So thinking about those two things, right? About, okay, so helping our clients buy more properties makes us more money. Helping our clients have better performing properties also makes us more money. These two actions normally are very synonymous with the responsibilities of an asset manager, which is looking at my portfolio, seeing which properties are performing good, which properties are not performing good, and then optimizing that. Plus, always thinking about how do I maximize my revenue and how do I grow my portfolio. So these two actions of portfolio optimization and portfolio growth are part, or I would say very natural to every asset manager's responsibilities. So if we take on that sort of like perspective as an asset manager, number one, we're going to make more money because we'll be able to, again, help our clients buy more properties, help them have better properties that are performing better. But also because we're now providing more value to our clients, we're impacting directly on how much clients we're losing every month, every year. Plus, we're differentiating ourselves from the competition. And we're able to attract a lot more clients because now we're not just providing them with rent collection and maintenance oversight and everything that we normally provide as property managers. We give them something greater. We give them something that has a much bigger calling, if you think about it from our perspective as a service provider for them. We're actually helping them build generational wealth as their asset manager. And that sounds completely different, which allows us to also capture more clients. So with that in mind, with the big why, let's dive into how that actually translates into, our client lifecycle journey, right? So
All right.
when,
As you're sharing your deck,
yep,
I got two points there that you made that I just want to summarize like in one sentence. One is, as a property management company, a lot of times we're actually managing assets that have more value than their money manager. So right there, right? So that's a great way of moving from property manager to asset manager. And also, Leo, I always hated the term property manager. I think it means gopher. Like property manager means the 10 cent items. Like go to my house and check out, make sure the gas guy shows up, or go to my house and make sure the pool is filled. Whereas as an asset manager, right there, just using language, because language matters, it means I'm the one that you have these higher level conversations with. And using your product, now your property managers that they become asset managers can actually have these higher level conversations. So love this
100%.
idea.
100%. I will even strengthen that with just one more sentence is, if you think about it, as property managers, we're not managing properties, we're managing investments. If we are managing, let's say, HOA units, then you might say, yes, we're managing properties, right, as part of the HOA. But when we're managing single family rental properties, we're managing investments. That's what it is. The property is an asset that is currently acting as an investment. So there's sort of like an identity crisis here where we might think that we're property managers and present ourselves as property managers, and our clients would actually also look at us like that because we also look at us like that. They would see us as just service providers. But, and this is the frustrating thing, they will hold us accountable as if we're their investment managers, right? So like if the rent is not paid on time or like anything that relates to the performance of the property, even if they were the ones who actually responsible for buying, a bad property in a bad area, right? They will eventually come to us with complaints.
Yep.
So they're holding us accountable as if we're their investment managers, but we're not being appreciated as investment managers. And this is where I think, we have sort of like an identity crisis when you think about it as an industry. So how do we take this whole mindset and really weave it into the client lifecycle journey? So if we'll break those sort of like three, I would say, milestones or stages in the client journey, we would normally look at sales, onboarding, and customer success, right? Now, what I'm going to offer to everyone listening right now is just a recommendation. This is not to say that this is the best setup. This is not to say that this is what you should do tomorrow. This is just to spark up the conversation, to spark the imagination, and see if maybe some of these ideas or some of these sort of like ways of building your process can make more sense for your business. So again, this is not like a must. This is just for imagination. So what I would recommend is the perfect client journey is the following thing. During your sales process, break it down into two steps. Break it down into a discovery call first, where you first of all learn about the potential client and understand if they are a good fit for you, and if you are, and let them understand if you are a good fit for them. Because the last thing you want to do is start wasting time on leads that are not worth it, that eventually don't really provide the value that you want. They're just complete headaches. And I bet everyone listening here probably meet some of these leads like every month, right? Folks who, in hindsight, maybe some of them are already our clients, that we probably regret the moment we actually signed them up and brought them as a client. It's in every business. So the idea here is to let you have a quick discovery call. Maybe that's 10 minutes, maybe that's 15 minutes, but something that wouldn't really ruin your schedule and hurt your growth and your ability to have as much calls as possible while still filtering the ones that you don't want to work with. So I would recommend having like a 10 or 15-minute discovery call. You get on that call, you just learn about one another. You don't share all your services, you don't provide them with the pitch. You just understand, try to understand how they will be as a client potentially, what are their expectations from you. And same thing, you can tell them what your expectations from them. You can tell them, and I would even recommend for you to be very, I would say strategic and aggressive about working with the clients you want to work with, and asking them the questions that will help you understand, is it a, let's say, a high maintenance type of client, right? That would require too much time of our team to just support, their questions and their needs and all of that, versus a client that might not need anything. He just wants to see the rent coming in. He just wants to, have everything work like clockwise, and that's it. So try to understand how you can, ask the right questions to filter out the ones that you don't want to work with. That enables you to, again, be much more deliberate on who you are meeting with and meet only with the folks that you really want to work with for that sales meeting. So that second meeting in your sales process might be the one that is longer, maybe 30 minutes or 45 minutes, depending on what you want, exactly to present there. But this is where you provide the pitch. This is where you provide, the presentation of your services. This is where you'll tell them about, how the process would look like. And here, one of the most important things to do as part of being an asset manager is ask the client what are their goals. What are your goals? Are you an accidental landlord that just wants to rent out this property for a couple of years until you have to sell it? Are you an intentional investor that plans to grow your portfolio eventually and buy a property every 2 years, 3 years, 4 years? What's that timeline? And ask those questions, because immediately when you start to ask those questions, you signal to that potential client that you're thinking differently from just a service provider. You're building a plan. You're building a wealth plan that you are going to be the one to help them execute it without them having to waste too much time or at all, right? Because if you have a brokerage operation in place, if you have access to investment properties that you can help them buy more, if you have the ability to help them renovate their property when they need to renovate a property that's very old and not performing very well, that's how you actually help them. Again, those two things that we said in the beginning: optimize their portfolio and grow their portfolio, which in turn is technically being an asset manager. So by setting those goals, you're already signaling that you're an asset manager, but also you can write down, maybe in your CRM or even on a note, what is this client's goals? So if he wants, for example, to buy a property every couple of years, set a notification, like literally set a notification in your calendar in 2 years from now or in your CRM to tell you, hey, this client, let's call him Josh. Josh said in his onboarding call that he wants to buy a property in 2 years. Now it's the time. Let's reach out to him and offer him to buy a property in our area. Like, write down those notes. These are the most important things because they will be part of your game plan that you're offering to the client. Now, let's say you finish the sales process, the client signed, everybody's happy. Now we're starting the onboarding process. Here, one of the most important things is, again, following up on those goals. But here, I would really recommend to use the onboarding process to wow your client. And what do I mean by wowing your client? Even if the client came to you by referral, he probably heard, okay, from his friend, this property manager is doing a great job, rent is on time, et cetera, et cetera, et cetera. But that's the only thing he has in part of his decision making on why to work with you. If you'll use the onboarding process to show them that he made the right decision, it will drastically improve your churn rates and increase your retention, but also will create probably a lot less headache for your team, because you can use the onboarding process to create some kind of a presentation like I have here, or maybe even just some kind of a Google Doc that you share with them all the steps we're going to go through their life cycle journey, right? What happens now? What happens after you sign the property management agreement? What happens after you do this? Just showing them how organized and how sort of like planned you are gives them the message of, okay, I'm dealing with a professional here. They know what they're doing. I have full clarity. I have full transparency on every process. And if you can even segment that onboarding or that deck into tasks for you, dear owner, what you are supposed to do and what I'm expecting you to complete, and tasks for us, what we're going to do for you during these different steps, that also immediately removes a lot of, maybe fear of what do I need to do next? What am I, what I'm responsible for as an owner? So I know exactly what are the next steps, and it immediately removes a lot of that stress that I have normally, because I don't know the process. I don't know what's expected from me. Here, when I know it, I also know how much time I will be sort of like needed to invest here. So by doing that and presenting some of the presentation, you really wow the client and show them that you know what you're doing here. You're a professional. Now, let's say we've passed the 30, 60, 90 days of onboarding, and we're coming to the stage that they're a client. How do we, again, take that asset manager mindset and we really reinforce that throughout their journey? So two recommendations here. And again, something you can do with Blanket, but definitely not a recommendation. You can do it also manually, what we call performance review sessions. For that, what you'll need to probably create is some kind of a spreadsheet, some kind of a pro forma that shows the client exactly how their properties are doing, right? And then using that sort of like session with the client, which can be maybe even 10, 15 minutes, or maybe even 30 minutes, depending how you want to structure it. You can talk with the client about how their properties performed in the last year, how much cash flow they generated, how much equity they have in their homes, and then go through like what is bad, what is good, and finish off with what are our goals for the next year, right? Are we interested in renovating the property? Are we interested in maybe refinancing, cashing out, and using that equity, those proceeds to buy another property? Are we interested maybe in, taking this property currently that is not operating well at all, losing money? Let's maybe 1031 exchange this property to a better one and solve all the problems at once, get better cash flow, better appreciation potential, and no headaches with that property. So that could be also one of the options. And when you do that session, again, you're reinforcing being more yourself, being more than just a property manager, but also, again, working towards that goal together. And by working together towards that goal of your client, that immediately removes probably a lot of, let's call it, resentment or anger or frustration when things wouldn't go as planned, which they will, right? We will have some vacancy, we will have some unexpected maintenance, we will have a lot of things that will probably make the client a little bit frustrated. If we are maintaining a relationship like this by doing once, a year, this sort of like performance review session, or maybe even more than that, it creates a partnership. And in a partnership, you normally don't go and start screaming, at your partner for something that is really not that big or not that crazy. So that will remove probably a lot of the headaches that you have and probably a lot of conversations with your team, but also help you generate more revenue, because in those calls, you'll uncover opportunities to make more real estate commissions from transactions. You'll uncover opportunities to add more properties to your portfolio, or uncover properties for renovating, properties and overseeing that in case you're charging a markup on renovations, or maybe you have your own maintenance division. The other thing I'd recommend besides performance review sessions is annual owner letters. And here again, this is something you don't need any software for, even though you can automate some of it with Blanket, but you can actually do something very basic. create some kind of a leadership summary, right? Like as their local real estate expert, how do you think the last year performed in terms of the real estate market? How, you think the next year will perform? What are your projections, right? And then maybe add a few insights on like legislation that has recently passed in our market to explain, understand, and like how that going to impact our portfolio as an owner. And if you want, you can also use that annual owner letter, which is a great value add for them, right? Maybe to add some real estate market trends in the area, but also use that for introducing maybe an increase in fees, right? Maybe you want them to sign some kind of an addendum to their PMA. So by using this once a year annual owner letter that provides them a lot of value, alongside maybe something that is not that good for them, which will make them pay more because they're increasing fees or whatever, that is a great way to present that to your clients. So I would highly recommend doing these two things as part of you reinforcing again your position as an asset manager that is more than just a rent collector. Now, a few, I would say, hacks or recommendations on how to really do it even better than just doing these things manually. I would recommend some tools that you can use, today. None of them, by the way, is blanket. These are like general sales and marketing and customer success tools that you can use in your business. So number one, if you guys are not using note takers, start. Okay. Start using note takers that record your meetings, especially if you're meeting your potential clients over Zoom, Google Meets, or any other video software, video call software. So use that because those note takers will make your job so much easier. You'll be so much more efficient in your calls, and you'll be able to be a lot more data driven by understanding how the calls are being conducted and how you can take away some insights from there to improve your sales process. The other thing that is very recommended, and this one is maybe less, I would say, known or familiar in our industry, is online deal rooms. And I'll talk about that in a second. And of course, a CRM. If you don't have a CRM today, you're maybe managing in spreadsheets or things like that, that's also fine, as long as you're documenting everything about your clients, when everything happened with them, so that you can have always context where they are at in the customer lifecycle journey. So what can we do with note takers? And we have about 7 more minutes, but I'll need to finish a little bit earlier so we can have some room for some questions. But I'm just gonna run through this real quick, and of course we can share the presentation afterwards and dive a little bit further to that. So note takers can first of all help us automatically share the meeting recording with our potential client. They can also generate us a summary of the meeting with like actual next steps. Normally the note takers give us, okay, what are the action items that I have to take care of? What questions were asked by the prospect, and a lot of other things just make your job way easier. You don't have to, even though I'm an old school, I still write things on my notebook all the time. You don't have to with these note takers. Another thing that you can do for internal purposes is sort of like create follow-up emails from there. You can tell the note taker, hey, please draft me a follow-up email and let me know what do you think is the closing probability of this client. Other things you can do is just review the meeting recordings for training purposes. You can easily share sound bites, with specific team members and tell them, hey, for your marketing team, for example, please use this for another testimonial on our website, right? You can integrate note takers with your CRM to push summaries of those meetings in there so you can have the full context where you're working. And of course, there's a lot of advanced reporting. Now, what are the deal rooms? Deal rooms, think of it as like a Notion or some kind of an online page where you have like a set of tasks for your client. You have a set of maybe materials you want to share with them. So one of the things that you can do here is keep your brand, keep your logo on it. You can present a mutual action plan with the client's goals, challenges, because it's like, imagine it's like a Google Doc, right? You can write, goals, problems, and add additional sections to it, whether it's pictures, videos, or you name it. And then you have some kind of a collaborative tool with your client that also shows you every time your client logs in, every time your client finishes the task that you gave them, and every engagement that they have. So it shows you, okay, is the client really engaged? Is he going through the process? Or is he completely ghosting me right now, right? So that gives you another ability to really increase your close rates. Lastly, CRM, probably all of us are familiar with it, gives us the ability to track the customer lifecycle journey, gives us the ability to insert notes, have tasks, reminders, emails, texts, you name it. Pretty much everything that involves customer management, we can do that in a CRM. Now, probably we're asking ourselves, what are the best tools out there, right? So we have some recommendations here. So for note takers, the one that I would recommend personally is Fathom. This is by far the best one in the industry that we've played with. We tried Fireflies, we tried a few others. Fathom is by far the best one, the one that I really recommend. We also, if you want, I can share with you a study or research that some kind of a sales consultant did where he signed up for all the note takers, like 30 something, brought them all to the same meeting, and then just compared all the summaries and all the outputs and came up with the result that Fathom is really the best. Deal rooms, the best one that I would recommend. It's one of two. It's either Recapped or Aligned. These are the industry leaders. You can go into their website and see how they look. Recapped is a little bit more expensive, if I remember correctly. We are using that as well, by the way, but Aligned is also a very good competitor to them. And plus, if you want some kind of a discount with these folks, let me know personally, reach out to me and I'll give you a discount because we know the founders there. So we can get some kind of a cool discount, maybe 10 or 20% if you do like to sign up with them. CRMs in property management, I would definitely recommend Lead Simple or Amply, which are really built for, the operations that we have. But if you're reaching a certain scale where you're already managing 5, 10,000, or even more than that, like tens of thousands of units, then you might be thinking to yourself, maybe I should look at tools like HubSpot because I want to centralize all my operations in one place, or other things like that. But if you're just starting out, you have some free tools that you can build a CRM pretty easily. And I would really recommend Airtable, Trello, or Notion. These are the ones, if you're just starting your business, for the first several units or several tens of units, you can start using them as you build out the process and then graduate to the more serious ones. Last slide here is always compare softwares, right? You saw a lot of logos there. Get into these different software comparison sites. You got G2, Capterra, Gartner. Use just all of them. You can easily put different software providers one next to each other, see the pros, the cons, pricing, etc. So you can really have a data-driven decision and not just something based on emotions or just a referral. And that's it. I tried to run through it. I hope we covered everything. But if we have any questions, we can dive into that right now. Pete, the mic is yours.
Oh man, you didn't even show a blanket. I thought you were going to show us a screenshot at least.
No, that's maybe for next time.
Next time. All right. So yeah, if anybody has any questions for Lior, just jump in there. And I am going to share my screen while we do that. And let's see. All right. So, anybody have any questions? So, if you want to become a more proactive, because Leo, I think you basically what you're saying here is to be an asset manager, you do have to be a little bit more proactive on the front end and also keeping the relationship going. So, if you need help with virtual team members, um, reach out to us with a white glove or our gold glove service. And our next webinar, we're going to learn how to create a growth strategy for your business. So feel free to scan the QR code there as well. And I think that's all we have. Let's see, any questions out there? I'm not seeing anything just yet. All right, man, Leo, that was great information. Really appreciate it. And I love the idea of asking the why when you're doing the sales piece of it because it is a huge differentiator and it does separate you and it does get your team to think like asset managers. Now, one of the questions that I have, and maybe some people have it, they haven't thrown it out there, is um, how do you get your property managers to think like asset managers? Because when I tried to do this, I did have some pushback. And part of it was because they're overworked already. But part of it was like, hey, I don't own any property. I've never owned any property. Like, so how would you go about and solve that challenge?
That's a very good question. I would say probably the biggest challenge today that we hear from folks is how do I even, get this thing started, right? So one of the things that we really wanted to do at Blanket is to make that question irrelevant, to just give you everything you need. So you wouldn't need to think, how do I say, how do I present it? How do I get the information that I need to present to the client? Blanket technically does everything for you. It surfaces all the data that you need, gives you all the insights, recommends what you should do with every client to retain them or to help them grow, and even generates a phone call script or an email script that you can just send out with AI. So it's pretty much taken care of. But is that enough? Is that enough to make your team members to actually adopt it and use it?
Mm.
I would say yes and no, because it really depends on how your team is structured. So we have clients that actually have a dedicated customer success manager. So again, they can call it customer success, client success, they can call it portfolio manager, but they have someone whose sole responsibility is to manage the relationships with owners. Is to talk with them about their needs, to talk with them about their goals, to talk with them about their problems, and make sure they're getting exactly what they're expecting or even more than that, right? So normally in these setups, it's very easy. Like it's just, get the tool and start running with it. Now, on the other end, you have folks that maybe don't have someone who is designated just for that, and maybe majority of the responsibilities are so like spread across the entire property management team. Then you have two options. One, you can really try to change how they think and really teach them how to think like asset managers, which is a long-term play, which I highly recommend in general doing. Because I think even if, again, you're not using blanket or you're not even thinking about being an asset manager, and taking it in a full-blown perspective, just by helping your team members understand real estate investments better, immediately gives them the ability to be a lot better in how they support your clients, because they just have the full context. They understand the emotional, sort of like pressure or
They can
the
actually
logic.
they can actually put their feet in the investor's shoes.
Exactly,
Yep.
exactly, and that will help them be a lot more,
Yeah.
efficient in
I'm
their
going to give
work.
you a hack. All right. This is what we did at Empire. We actually created a course that Steve and I taught, and it was basically an investor course. And I think it was like maybe like a full day of course. And we had all of our property managers sit through the course, and then we gave them like a little exam, and then we gave them a certification. They had an Empire certified investor, asset manager
Amazing.
certification. So let's take that.
Amazing,
All right,
amazing.
we got a question from Andrew here.
Yep.
How can we help communicate this to residential owners who aren't familiar with commercial asset management? Essentially, what's the value prop in a language that they understand?
Think of it, you can, if you want to really, like, I'm trying to imagine the accidental landlord, right? That has no clue what cap rate is, what NOI is, or things like that. I would maybe decide that I don't want to use the word asset manager. Maybe I just want to use the word customer success. Because when you think about it, right, what does an asset manager do? He checks what the problems are in the portfolio, and he uncovers what are the potential, resolutions for that, and then he provides with an action plan to implement that. What does the customer success manager do in general industries, not in real estate? Same thing. He checks with the client what are his problems, what are his goals, what are his needs, and then he goes and implement that. So if you want to make it maybe more approachable and not that high level for certain clients, you can just say that this is your customer success service. This is your value added service to your clients that helps them really achieve their goals. Because eventually, again, you don't have to talk with all the, talk about all the metrics, what is cap rate, IRR, and all that. You can just adapt this mentality of understanding how your clients are doing, asking them what are their goals, problems, and needs, which again, normally, I would say in 99.9% of cases are centered around the property's performance, and then just provide a plan according to that, right? Because once you have that information, you can act upon it. If they want to buy more properties, you can help them do that. If they want to optimize their cash flow by renovating their property, maybe getting a cheaper insurance, landlord insurance quote, or whatever, you can help them do that. So I would try to really, understand what my client profile is like, because some folks manage maybe only intentional investors, some folks have a mix of accidental ones, and some folks have just accidental ones. And maybe, talking with them about property performance is not that really relevant. But you can always adapt it to your client profile. And and I would even strengthen that even more. I would try to decide how I present this whole, offering whether it's again customer success, whether it's asset management, whether it's wealth management, name it however you want. But the main principle at the end of the day is understanding your clients better. And if you have, for example, let's say 50% accidental landlords, 50% intentional investors, I will treat them differently. I will come up with the right approach and with the right service for each one of these sort of like segments of my client base. For the accidental landlords, I might not need performance review sessions. I might not need to meet with them, every time to go over the performance of their properties, but I would like to update them every time, or maybe every quarter, every year, how much their property increased in value, maybe how much equity they have in their homes. Why? Because that's the thing that interests them, because they're planning, to sell the property at a certain point. So what's most important for them is the property's value and how much equity they have and how much proceeds they can get. And give them always the sort of like this um, exposure to what services you can provide them whenever they're ready to sell, right? Or maybe even give them a discount, right? When you sell with me, I'll give you 1% discount on your commission, right? So like that is for them. The intentional investors might be looking at it a little different. They might be more interested in, the cash flow. They might be interested in sort of like their like maintenance to income ratio, how much money they're spending on maintenance versus how much money they're making. They might be interested in more of that, performance of those performance metrics. So for them, I would probably do those performance review sessions, right? I will have a deeper conversation about their goals to buy more properties. I will have a deeper conversation about their goals to optimize their properties. And by doing so, I can put it all under that umbrella, again, to your question of whether it's customer success management, whether it's asset management, whether it's wealth management, and then break it down with the relevant approach and with the relevant service for each one of my client types, whether it's accidental or intentional. Hope that answers the question.
That spurred another question for me, and then we have another one from Jonathan real quick. The question I have is, do you have to actually ask these questions? How much do you have on your note? How much equity do you have? What's your property worth? Or is this where, Blanket would come in and have this information so I don't have to ask those kind of personal questions right when I'm meeting somebody?
Yeah, so that is probably one of the biggest, lifts I would say in terms of becoming an asset manager is getting the data. That is probably the most difficult thing to do to really become an asset manager, which is how do I get the data about the performance of my properties that is accurate enough for me to actually make decisions upon, right? Because I can get data, but who says it's accurate? And if it's not accurate, I can make a very bad decision that might cost me the client, might cost me money. So how do I get the data? And here we got two options. Either use Blanket. Blanket is the way we work. We integrate with your property management software. We then pull a lot of data from title companies, public county records, and national data providers. And then we show your client and you how much their mortgage payments are, what their interest rates. We show what the property taxes they're paying, what's the insurance they're paying, pretty much everything about their properties with no manual data entry. Now, you don't have to pay for Blanket to get that. You can technically ask those questions and get that data from your clients and build some kind of a spreadsheet, right? That, think of it as a pro forma for each one of your clients. And once you do it once, it's just maintaining it, every, once a year, going back, collecting all the data, which sometimes can take, some time. We have clients that actually came to Blanket because they were investing like 2 to 3 hours in preparing these pro formas for every client, by the way, for every client. So you can either do it manually or you can do it with Blanket. And then once you have that data, then you can really have that conversation with your client. But I would still recommend to always in those questions to ask that, your client about those metrics, because who knows, maybe we did a mistake in the spreadsheet that we created. Maybe Blanket pulled some kind of a data point that wasn't accurate because it's a property in a non-disclosure state. And sometimes they're missing data points from title companies on sold properties. Texas is a great example of that. I would always recommend to start the question, with like, first of all, let's lay the groundwork, make sure we have all the data correct in the first 2 minutes, and then we can start talking about the different questions. Now, I know Jonathan, who is also listening here, me and Jonathan, one of our first conversation, we actually met. We planned to talk for about like, I don't know, 30 minutes or so. We eventually ended up talking for like 4 hours. And a lot of it was on about his experience also in the past where he was doing it himself. He was creating these pro formas himself and creating these presentations for clients. and it's a lift, but it's worth it. It's definitely worth it.
So he actually has a question,
Ah,
and he says it may have gone 4.5 hours,
oh,
which is probably true. Knowing Jonathan, I've had some of those time sucks with Jonathan, and it's always great conversation. So we love you, Jonathan. When you operate in multiple markets, do you show different strategies in each market? How do you suggest keeping mom and pop investors from thinking an asset should cash flow
mm,
non-cash flow market? All right,
um,
we're getting into real estate investing psychology
yes.
here. So
Very good one, Jonathan. I would never expect not having a question like that from you. And this really shows again. And now there may be some props for Jonathan as well. Jonathan has been doing this for many years in the past when he was in AHI, and they were doing an amazing job. And by the way, in my previous company that I worked for about 10 years ago, it was a big investment company that was doing a lot of build to rent and single family rental funds across the United States. So we were working with AHI quite a lot and sharing a lot of clients. And this is a great question of someone who has been really thinking about the right approach with every investor and with the right approach for every market. And this is another level. If we want to get a little bit more deeper into that, yes, when you operate in different markets, it should hold a different strategy for each client. Because take California, for example, right? If we have any listeners from California, this will be probably something you get a lot. There's not a lot of cash flow, probably, positive cash flow properties that are generating there. And if so, it's like very, very low, almost zero, especially if you have a mortgage in place and you have, a mortgage that you took on actually in the last couple of years with a high interest rate. So you're actually losing money. And the reason I'm doing this is because you're losing money on cash flow. You're not necessarily losing money from an investment perspective. Why? Because in every investment, you have four levers of revenue generation. One is cash flow. This is just one, but the other three are appreciation, equity paydown, and tax savings. These are the four levels of total, if you think about it, ROI on your investment, your return on investment. So one of them might be very low, but if the others are very high, in the total grand scheme of things, you might be doing great with your investment. So to really help clients understand that, we always have to talk with them about those four levers and what to expect, right? If they're a client with a property in California, you might expect that yes, cash flow would not be that great. It might be even negative. But look at the appreciation rates. Look at like the average appreciation rate in the last 10, 20, 30, 40 years. And you can easily get that, right? You can easily pull it up from different data sources like Fred or other data analytics, websites, and just see what was the appreciation rate and just show them, hey, this is how properties are doing here. So you might be losing 100, 200, maybe even more dollars a month on in terms of cash flow, but it takes just 3% of appreciation on $1 million property to offset that completely. So we'd always talk about those four levers of revenue in real estate properties and adjust them to every market. So if I'm in a market like Indianapolis, where it's a great cash flowing market, I would really talk about the fact that yes, maybe you bought a property that is great cash flow, has great cap rates, but probably not a lot of appreciation potential. So from the get-go, I would recommend in those markets thinking about buying, below market value, banking on that cash flow that will be coming in, but also being ready for some, I would say risks and also not that crazy appreciation rates in that market. So for every market, I will adjust those sort of like levers, first of all, internally, understand what we can expect from the properties that we manage for our clients, and then share that with our clients. So that way we can be aligned on expectations. We don't want a client to be complaining about low cash flow or negative cash flow when he bought a property in California that either way is in a very expensive market that is going to be negative cash flow. We don't want him to come complaining to us. We want him to understand that that's what he should expect from this property. So yes, so Jonathan, to your question, I would always use these four levers of revenue per each market and explain what to expect to each and every client. So that way we can be completely aligned.
they are. Thank you so much for being here. We could probably ask you questions all day, but we're gonna end it here since we're literally another 15 minutes over
Oh
our
boy.
allotted time. But I think most people stayed, so thank you everybody for sticking around and appreciate you all. Till next time. All right, Leo. I'll see you
Thank
in a
you
couple.
guys.
I'll see you next week, actually,
Will
or two.
do.
See you, everybody.
Indeed. Bye, guys.